righty. Mofo, what's happening? Let's get ready to get started. Good evening, good evening. Everything's recording. Everything's good to go. Wonderful. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader. Stan, how are you tonight? Brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for a ride for a safe, predictable, consistent, and easy strategy to help you also get 1% per week. That's over 50% per year. Let's get started. I need to, Sherry, how are you today? Stan, Bama Redneck, up late, I see that. I just need to call and let you guys know that I'm a little late today. Reason being is, a couple of days, I must have ruffled some feathers because I got booted for 3 days. So, this is my first time being live in 3 days. So, let's just get started. Why not? Sherry, good evening. Bama Redneck, up late. Okay, so let's get started. Where did we end up last night? Now, last night I was shooting some videos just on the dividend stocks that I use specifically to create a 1% per week strategy. Okay, fine. So we're looking at CME. Isn't that CME? Isn't that Chipotle? CME. Okay, try it again. CME. That sounds a little better. And it is CME Group. It's a monthly. That's going to be a no. Not for long. Yeah, I don't blame you. Terry Smith, how are you? Just running a little late tonight. Ooh, look at that. A lot of people on here. So for those of you that are new here, don't quite know who I am, I invest in dividend stocks for a simple, safe, predictable, consistent, and no way to lose strategy for my 9-year-old daughter back in 2008. So she said, Daddy, can you teach me to trade? I said, sure. Well, here's the thing. It has to be simple, safe, predictable, consistent, all that kind of nice, neat, fun stuff. So I had 5 simple rules. Rule number 1, never buy a stock you do not understand. Ivan, good to see you. Number 2, make sure you never take a loss. Never sell for a loss. It kind of defeats the purpose. Number 3, make sure the company is at least profitable. I like 20 years of consistent profits. 4, make sure you have weekly options. This way you can get a weekly check, weekly cash flow. That's what I'm looking for. And 5, make sure the numbers work. So let's take a look at some of the stocks that we've been trailing for the past couple of weeks. First one on the list tonight is going to be Whirlpool, WHR. Wait a minute, no. That's not where we're at. We just looked there. Kimberly Clark is next, KMB. KMB. So I'm actually recording videos at the same time, so let's see if we can do this. Alrighty, we're looking at Kimberly Clark, KMB. First thing I always want to look at anytime I look at any stocks is the chart. Let's take a look at the chart. First thing, quick, it doesn't take that long. Okay, it doesn't take that long at all. Look, here's your high of the year, here's your low of the year. That's where it was a year ago. This is where it is today. What direction is she going? Sideways, up, down. Well, this is going to be a no. I can tell it by looking at it right now. Like and subscribe. Way to go. So let's take a quick look at the last couple of days, because that was the 1-year chart. Look at this last 30 days. Up, down, big drop. That's going to be a no, only because I want to jump in after she turns around and starts going to the upside. Okay. Oh, okay. Procter & Gamble and Kimberly Clark down today. What are my thoughts on DJT for trading? The DJT, it's a fresh new stock. It doesn't have very much information on it whatsoever, DJT. Because if you're looking at historical performance, well, you can't have historical performance with a company that's not that old. You have to have age in order to have history. So the historical performance for DJT, it's just not there. Your high was 80. That was back in March. Well, now she's sitting at 33. Okay? Good evening, James. 86 here. How are you doing? All right, what do you think about calls on Spider home building stock? Hold on a second. Hold on a second. Now, number one, I don't do the spiders because the numbers just don't work for me. Okay, I like consistency. There's no consistency with the spiders. Hey there. Hey, Adam Devine, how you doing? So if you take a close look at the spiders and you see what kind of dividend they pay on a consistent basis, is it consistently going up? No, it's not. Okay, take a look at the numbers. They're up, they're down, they're up, they're down. It can fluctuate anywhere between 5 and 20%. I know it doesn't sound like much, but when you're retired and you're relying on a certain income, there's a huge difference between $1,000 a week and $800 a week. That's a big freaking drop. That's 20%. Okay, yeah, and it's not consistent. There's no consistent growth. Also, take a look at the overall yield. What are you jumping in at? What is the yield on it? Okay, say the spiders has a horrible yield. Let's take a quick look just to show you what the yield is. Big fan, thanks. What the yield is on the spiders. And then you tell me whether or not you like the idea. SPY. SPY, enter. It's going to pop up any second. I like using Yahoo Finance. And here it is right here. The spiders. SPRD, S&P 500, SPY. That's the spiders. Look at the yield for the year. Seriously, look at it. 1.23%. 1.23%. You're putting your money someplace and it's decreasing every single year. Well, it says 1.23, but if you can count in inflation, inflation is at double digits. Anyway, what the hell are you thinking? I gotta throw that out there at least once a night. But seriously, what the hell are you thinking? Are you not interested in what your money is doing? Okay, jump in, take a look at the numbers. Numbers dollar, sir. I can't look. Screen is white. Okay, that screen is live on YouTube. Okay, that way it's recorded, and when it comes up on YouTube, it's not as bright. I don't know why it's so bright on this damn thing. Because see, when you put up the dark screen, the stock screen is so dark. Okay. That being said, seriously, look at the numbers. Anyway, keep going. Keep on going. Where is CVNA going? Lance Fisher, how are you doing? CVNA. Carvana. Well, it looks like it's going up, but you know, I'm no expert. Look at that. It looks like it's going up. That's the question. There's your answer. All right, what's next? I'm new here. Want to learn. El Jerry, what's happening? Hopefully tomorrow will be up for Kimberly Clark. Okay, but remember, with Kimberly Clark, I like 2 days to the upside. Okay, right now, instant follow from me. That was awesome. Well, alrighty then. I'm not quite sure what was awesome because trying to read all these questions. Retail got crushed today on a day you could have thrown a dart. Why do you suppose? He is going to get mad. I got 15 calls for January. Oh, Stevie Ray, why would I get mad about that? I got calls on February 21. I don't know what you got them for, but I got them for Apple. What stocks should I invest in for this week? Oh, Zetrix, how are you today? Simone, how are you tonight? HE, oh, sorry, dude. HE, Hawaiian Electric, ever since the fire, they've stopped their dividends. It's just nothing's happening there. So HE's going to be no. Creator, Coca-Cola time yet? Ooh, I like Coca-Cola. Ooh, drop on Coca-Cola today. Did you see that? Yeah, we're still looking for the bottom of Coca-Cola. Yeah, I know. HE the stock. HE the stock. Hawaiian Electric. It's no, because they stopped their dividends. I just bought some Microsoft. Mart, how are you today? PLTR. PLTR has no dividends. That's a no. Microsoft, MSFT. Oh, I like Microsoft. Microsoft is cool. The reason why I like Microsoft so much is that they consistently increase their dividends every single year. Year after year after year. Look at the growth on it too. I'm not really looking for growth though, Joan, just in case you didn't know. Up, down, up, down, up, down. Here's the high back here at 470. Well, currently we're at 420. I don't know what you're doing with your Microsoft, but I like to jump in. Let me see what this question was. I like to jump in and jump out within the same week. Anyone in my position had a great increase today. Cool beans. All right. So Microsoft, let's take a quick look. A year ago at 350, topped it out at 470. Now we're at 420. So basically up, down, sideways. Okay, fine. Let's take a look at what the numbers look like. Now, what I like to do is what's called a covered call, where I buy the stock, I sell it. The rights, not the obligation. There's a difference between the rights and obligations. Okay, with a call option, I can sell somebody the same price that I just paid for it. So if I'm going to pay $4.19, the closest strike price when doing a covered call, strike price right here, is going to be the $4.20. And the $4.20 is going for $5.25. Now I like to get 1% a week. Microsoft all the time. Almost every single time do I get 1% on Microsoft if the numbers are right. Let's take a look at the chart and see what the chart is telling us. Because just because the numbers work, just because I'm making my financial goal, is it the right time to buy it? Because options expire every 7 days. So every week I'm doing a new option strike every week, every option trade, getting at 1% a week. That's over 50% per year. Now you may think I spend a lot of time on my computer. No, I don't. I only buy 2 or 3 stocks a week. I sell 2 or 3 stocks a week. And it's a constant revolving door. Okay? So, a year ago, the bottom was 353. Topped out 467. Look at the last 90 days. Down, up, down, up, down. Now she's going up. That's almost clear as day. Down, up, down, up, down. Look at the gap. I love a gap, especially coming off of a high. Hit the high here, gaps down, hits a bottom, turns around, goes back up. Freaking perfect. And the fact that it's going to give us more than 1%, that's just cream on the crop. All right, so last 30 days. Now, I want to see the last 30 days specifically to give me an idea where I think it's going to be Friday. Not 2 days Friday, because the numbers really don't work there because it's only 2 days. Next Friday for a whole week. Remember, options expire every Friday. Well, this Friday is only 2 days left in the week. So we're getting 20% of what we should be getting normally. So yeah, let's just go to next week. Now, currently, $4.19, the stock price. The bid, the ask, the stock price. 26 million shares traded today. So the 20, see, it's $4.19 right now. The 420 is going for $5.25. So let's just throw one out there, see what it looks like, and see what Microsoft could actually set you back if you were going to do Microsoft. Okay, I'll save that to draft. I'm doing a bunch of videos tonight too. Apparently need to get some more traction over my other website. All right, so that being said, let's take a look quickly. For those that are new here and haven't been seeing this yet, we're going to do what's called a covered call. That is going to show you how to buy and sell a stock at the exact same time, collect a 1 or 2% premium on a weekly basis. This way, I can get 1% every single week. All right, so the 419s, we agreed the 420s looks best, so we'll buy that right there. Let's just do 100 shares or 1 contract. Okay, here's what it sounds like. Buy 1 covered call of Microsoft. 15 November 24. That's next Friday because the option expires every Friday. The Microsoft, the 420 call option against the stock at 414 limit order to open. I usually do a market order. That way it fills first thing in the morning. The nice thing I like about doing the covered calls is it tells me exactly what the profit's going to be as I'm doing it. All right. So the break even Very next number down, the break even is 414. Well, it's currently at 419. That's a $5 spread between what it's at now and the lowest the stock can go before I stop making a profit. Because anything over 414.25 is going to be a profit. But if the stock goes to 420 and stays there, well, fine. I make my money. I get my cash back. It's like, thank you. You know what I mean? But anyway, all right. So the profit on this trade is $5.75 per contract. Okay. So take $5.75 divided by, what is it costing me? Well, it's costing me $41,425. So that's 41 grand, 425 for a week for 100 shares of Microsoft. So it's 1.38% for 1 week. So if you want to know how to get 1% every single week, I just showed you how to get 1.8%. Well, 1.3, 1.38. Okay. Now, I like it because it's simple, it's easy. My money's just sitting there not doing anything, so I might as well make money off of it. It reminds me of when I used to have a manufacturing company, and then you walk in and it's all of a sudden you see half of your employees just sitting around doing nothing. Well, that ain't gonna work. So why would you leave money just sitting around doing nothing? Let's go to the next one. So good for you, you bought Microsoft. PLTR, no. Home Depot, ooh, I was at Home Depot this afternoon. I made a video at Home Depot. Uh-oh, where was it? Uh-oh. PLTR, nope. Home Depot, there we go. Cassie Nix wants to take a look at Home Depot. Home Depot is in the 400 area. Alrighty, let's get out of that. Let's go over to here. And here is Home Depot. Very first thing I always want to see is where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? And what is the movement? Up, down, up, down. It's coming down at the moment. Not a pretty sight. Let's zoom into this really quick. Yeah, which means we're going to put Home Depot on our list. Now, we talked about this yesterday. Okay? We did. Home Depot had a bottom here, and we wanted 2 days to the upside. Well, Monday, Tuesday. Now, we're looking today if it was going to be good. So as soon as she opened down. That takes it right out the door. Right out the door, now we're looking for another 30-day bottom, which it could be today. And we're going to wait 2 more days, tomorrow, and then Friday. And if Friday is the second up day, well, good, then it's time to jump in. But at this moment, it's just like hold back, wait, and find the bottom. Because this may or may not be the bottom. We don't know. So it just takes 1 day at a time. Okay, so we're not looking at Home Depot tomorrow, but we'll look at Home Depot on Friday. Let me write that one down. Home Depot. Right. Now you'll see, as you hang out with us, you'll see that I trade the exact same stocks over and over and over again. And the reason why I trade the exact stocks over and over again, because they're consistently profitable. Home Depot is a dividend king. That means they have increased their dividends to their shareholders for more than 5 decades. They've been in business for over 100 years. I love Home Depot. When the numbers look great, sure, I'll jump in. At this moment in time, we're on Wednesday night. So first thing tomorrow, no, I don't like buying at the bottom until I know for sure it's the bottom. Okay? So maybe next week I'll jump into Home Depot. I don't know. All right. Next on the list, SMCI. Okay, BAL, B-A-L, BAL. SMCI, no. No dividends, no thank you. Terry Smith Sr., how are you? How much should I shoot for with a great return on my investment? Kamal, I honestly cannot answer that kind of a question for you. Okay, I have no idea your age, no idea your background, no idea what your goal is, no idea what your risk level is, no idea what your capital is, no idea what's your driving force. I don't know anything. So I really can't tell you anything about anything. Best thing I can do is you throw up a stock and I can give you my opinion on it. That's about it. But to ask me what you should shoot for an investment for a return, I get 50% per year. Well, actually over 50% per year. But I don't like telling people that because they think it's weird. They think 50% is weird. But it is what it is. All right, let's keep going. Can you look at EFSF? I can tell you no right now. EFSF. EFSF. No options, no thank you. Caden, sorry. Advice on SMCI. SMCI. Apparently didn't like the first time I said super microcomputers. Yeah, they ran into a bit of an issue. Okay, now I said no first. I didn't want to bring it out, but if you check the news lately, something really bad happened with super microcomputer. Okay, I think it was something about creative accounting. That's never good when they go examine your books and they say, oh, we got some creative accounting here. Only a few people will actually know that. Okay, solder, Apple, AAPL. All right, Apple. Now, I have some Apple. I did Apple as a calendar spread. I don't know if you know about what that is, but here's the thing. Apple has a nice seasonality to it. If you look at it from January until December, let's go really quick. It almost looks like it's flat, but it's not. It's a nice steady upward trend from January 1st all the way to December 31st. Can you imagine that? It goes up every single year. Let's go all the way back. Okay? The blue line represents the movement for this year. The red line, 10 years worth of movement. January 1st, December 31st, every single year. Nice, steady upward trend every, okay. Apple, beautiful. All right, that being said, let's move out of here. Get this back over to here. All right, so check out the numbers. Always, always, always. High, low, where was it? Where is it? Look at the movement. Up, down, up, down, up. Now she's coming down. Let's take a look at that area right there the last couple of days to see what is going on. Look at that. Isn't that beautiful? Shoots up, comes down, up, down. Now she's going to the upside. 1, 2, 3 days. You have two higher bottoms, today and yesterday. So is she bouncing off of this bottom down here? It sure looks like she is. Okay, now I can't tell you what to do, but I do have some of this. ASFA, is that a name? ASFA? Meta. Yeah, no. Meta is on what? The second dividend payment? Second. That means 19 and a half years will I be looking at Meta. Sorry. No dividends, no thank you. It's just, it doesn't help me out if they're not profitable or doesn't show. Do you people learn how to read stocks and make option calls? Well, that's what we're here for. Ooh, John wants to take a look at CVX, Chevron. Wait a minute, I didn't finish up with Apple. Okay, well, let's take a look at the numbers for Apple. 222.47. The 222.50s to go for 320. That's 1.5%. That sounds good to me. Well, I already own some Apple, so and I like the rate of return that I'm getting. So that being said, John wants to look at Chevron, and Francis wants to look at U.S. Steel. All right, CVX. We had this question last night, okay? Like, what is going to happen with the oil stocks? Well, you got one candidate that's saying, drill, baby, drill. And you have the other candidate says, plug me in. You know, big difference. So, that being said, look what happened to Chevron today. Nice. Okay, so, high, low, where was it? Where is it? Where's it going? Up, down, up, nice. A little bit out of our reach. It already, in my humble opinion, it already made the move. Look at that. Okay. Already made the move. So now she's going to hit a high, turn around, come back down, and we'll probably look at it again in 2 weeks. CVX. All righty. So next on the list is going to be X. US Steel. Nice jump it made too today. Look at that. Again, something I would stay away from because it ain't a profit until you take it. Look what you're looking at. Look at that run up from 34 up to 43. I know it doesn't sound like much. It's $9, but $9 at 34. Because remember, it was at 34 first. Now it's at 43. Okay, $9 on a $34 stock. Well, that's close to 30%. That's a big jump in 30 days. That's 10% a week. 30%? No. 4 weeks, 7% every week. So 30 days, yeah, that is a nice run up. More than likely, there's going to be profit taking. Profit taking, yeah, I don't like buying at the high. It could go up. You just don't know. Having issues with Facebook. All right, I'll wait for that thing to do whatever it's doing. All right, so no to U.S. Steel. Sorry about that. What else we got? I meant one-on-one. Nitro. Sure, why not? Come on. All right, let's see if it loads up again. Can you elaborate on the cream of the crop? Shooter McGavin. Really? Shooter McGavin? You're going to use that name? That being said, you need to be more specific when you mean the cream of the crop. There's 9,754 companies available to invest in at any time. Yeah, you need to let me know what you want to take a look at. Hey, bro, please talk about Dogecoin. Well, Dogecoin. I bought some of that. Freaking awesome information and explanation. Mark, glad you like it. This options, yes it is. Who's that? Kink No Picks? Interesting name. Yep. Hey, bro, please talk about cream of the crop. You need to let me know what ones you're talking about. Okay? Because there's 9,754 stocks. Alrighty. Oh, here's one going. What do I think about the euro US dollar is going to affect from the Trump's election? We will soon find out, won't we? But I don't do Forex. That's something you have to follow along with. Oh, wow. I missed a lot of these questions. Ford, Coney, oh my goodness. Somebody wants to look at Coney. Wait. QCOM. I didn't see that one. All right, right there. Here we are. What do you think about it? Nope. Walgreens. Stan A wants to take a Walgreens WBA. Here we go. Walgreens. Interesting day today for Walgreens. All right. High to low. Where was it? Where is it? What's the direction? Up, down, up, down. Okay. Right now we're at 9:23. Okay. I'm into it at 10:30. All right. Anyway, a year ago we were at 21.76, topped out at 29. What is that? 26.79. Oh my eyes checked. My goodness. Bottomed out a couple of weeks ago at 8.21. Nifty. Okay, last 30 days. Take a look at the last 30 days and tell me what you think. Well, here's your 30-day bottom here. Shoots up to your top. There's your profit taking right there, going sideways. She tried to go up today, right? She opened up higher today but pulled back. So not really quite sure which direction it's going. It's going sideways and look like the pendant is going a little bit open. So where's it actually going? Don't know. I'm into it at, like I said, 10:30. I sold, what did I sell? I sold the 9s and the 950s this week. The 9s and the 950s. Well, what I sold is both going to expire. So I'm going to get all my cash back and then do it again on Monday. Works for me. All right, that being said, Walgreens, usually this time of year, goes, there we go, right to the upside. Look at that for the next couple of weeks. Now, this is all historical performance. It's not guaranteed, but it does look like it goes to the upside towards the end of the year. That, Gracie Trader, how are you today? I don't know what the hell's happening there on Facebook. Having issues with Facebook. All right, so that's Walgreens. Let's get out of there. Back to here. Yeah, there's no real rhyme or reason to which direction it's going for the next couple of days. Because it looks like she's heading to the upside. Okay, here's your 30-day bottom. Here's where we are now. So it is going trending, what are those words? All right, next on the list. QCOM. Is that right? I saw QCOM. There it is right there. QCOM. Workday Wednesday. QCOM. I think QCOM's on my list somewhere. Interesting movement. Take a look right over here. Let's see if we do Facebook one more time. Some strange reason Facebook just doesn't want to seem to work out quite right. Which is okay. Hardly anybody ever shows up on Facebook. Here we go. Here's Johnny. All right. And loading. All right. High, low, where was it? Where is it? Up, down, sideways. All right. Look at the last week. Look what's happened in the last 30 days. That's what I want to see. Uh-oh. That didn't work. That didn't work at all. All right, a year ago, 118.63. Topped off the year at 231, and that was 620. Okay, Francis, we already looked at X. Wait a minute, did we look at X? I don't know. All right, last 30 days, look what she's been doing. Just going sideways recently. Okay, up, down, up, down, up, down, up. Yeah. She's coming down next. So we'll put QCOM for 2 weeks. I like QCOM, but not this week. QCOM. All right, it's plain to see. Look, up, down, up, down, up, down, up. Next, it's going to come down. So that's going to be a no. Sorry. Big Fame. Workday WBA. Workday Wednesday live. All right. So, Francis wants to take a look at X. Didn't we already look at X? We did. Okay, we already looked at U.S. Steel. Okay, it's at a high of the day, or a high of the 30-day period. There's going to be profit. Look at 30 days ago was the 30-day bottom. Today, 30-day high. More than likely, there's going to be profit taking in. No, I don't buy at the high. That's kind of like rhymes. I don't buy at the high, and I'm going to tell you why. Okay, Meta. No. What's the day technique? I'm not quite sure what you mean by that. PRCT, are you familiar? PRCT, absolutely not. Okay, the reason why I don't know anything about them is it's a monthly optionable stock. Monthlies, yeah, no thanks. The reason why I don't like monthlies is because you got to figure out where it's going to be every 30 days. Every 30 days. I have a difficult time enough trying to figure out where it's going to be in 5 days. Doing the weeklies is more profitable than doing the monthlies. I just don't do the monthlies. They just don't work for me. Ratham, what do your thoughts on Invesco? Invesco NASDAQ 100. You actually got to give me the ticker symbol, dude. Sorry, because I don't trade stuff like that. 2-day technique. I don't have a 2-day technique. IVR. There it is. That's a no. Albert, how are you doing? Okay, IVR is a monthly. Okay, it means it only has options that are available to do once a month. So Albert wants to take a look at the gap. Let's take a look at the gap. We're going to take a look at that 1 second. Now, the reason why I don't do monthlies, there's only 12 months in the year. That means I'm only getting a dividend check, dividend check once every quarter, a covered call check once every 30 days. No, I'd rather get the dividend every 90 days and then get a premium check or a premium check once every week. That's 52 times a year, especially when the percentages are the same. If I'm looking at 1 or 2% here, that's 12 to 24% at the end of the year. Well, on a weekly, 1% is 52% per year. 2% is over 100% per year. So ask yourself the question, do you want 12 to 24 or do you want 50 to 100? It's actually a simple question, simple math. I could even get a grade school to tell you which one's better. All right, so IVR, no. Don't need too much to get started trading. Absolutely correct, Matilda. Coney, ugh. Mala Tiwaldi. Is that right? Mala Tiwaldi? Coney? Yeah, no. C-O-N-Y. There's a couple of reasons why I don't like Coney, but if we could just end it here with the fact that it's a monthly and the numbers just don't work, that way we can get to something else. Okay? No dividends, no thank you. MSTR, no dividends, no. Sorry. FRO. What the heck is FRO? Frontline. Yeah, no. How much should I start with if I work at Home Depot? Now, Warner 645. That's a financial question that only you can answer. I have no idea what your monthly budget is. I have no idea what your goals, dreams, aspirations, risk level. I know absolutely nothing. You hypothetically, if you're an adult, you should have a grasp of what you need to live comfortably. Not what you want. There's a huge difference between wants and needs. Okay? It's like the only thing you really need in life, food, clothing, shelter. That's it. You don't need anything else. Food, shelter, clothing. All right. Let's keep on going. FRO? No. How much should I start with? I don't know the answer. Stens. Are there high growth small cap dividend funds? Yes, there are. But let me ask you a question. What funds out there offer more than 30%? See, what I teach here is a simple, safe, predictable, and consistent 1% per week strategy. It was created for my 9-year-old daughter. I'm pretty sure if my 9-year-old daughter could figure it out, you could. Now, we got some people in the audience that's never seen The Little Princess. So let's go and take a gander. Let's go over to my YouTube channel. Those are all my social media sites. So we're going to go to videos, oldest, and there she is.
Hi, I'm JC, and you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return.
What's my favorite part?
Over 20 days.
There's me, 15 years ago. Look at all the hair I had, my goodness. And it wasn't gray.
That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
That part always cracks me up. It was funny then. It's even funnier now. Okay, so I created it for my 9-year-old. So if she can figure out how to do it, I'm pretty sure you guys can. All right, so let's keep on going. So, yeah, to answer the question, Stens, I don't know any small cap dividend fund that actually pays over 30%. All right, Parker Austin Draft. Parker Austin Draft. IBT. IBIT. Yeah, no options, no thank you. Sorry, we already did Coney. Coney's a no. User 33085, Ford. Let's take a look at some Ford. Ford made a big jump today. Well, I'm kind of interested to see what it looks like. The high, the low. Where was it? Where is it? What's the direction? Up, down, sideways. It's at 11.20. What's the 11.20 going for? Well, the 11.50 is going for 7 cents. No. The 11 is going for 24. You take the 20 off there, you're walking away with 4 cents. No. I like Ford, but at this moment in time, these numbers just don't work for me. There's no point even looking at the chart. Okay, if the numbers don't work, yeah, no thanks. There's over 9,000 companies to choose from. Why would I choose one where the numbers don't work for me? Now, last year, Ford was my favorite. It was well over 1% every single week. This year, not so much. The market maker must have changed. Maybe he has a new mortgage or a new alimony payment. I don't know, but he's not giving up very much on the premiums. What about Walgreens? We already looked at Walgreens. Sorry, Michael, already looked at Walgreens. PSEC. PSEC doesn't have any dividends. I don't think they do. Hold on a second. Let's take a gander. PSEC. PSEC. All right, so we want to look at historical data. Come on. Historical data. So I go over to YouTube, not YouTube, sorry, go over to Yahoo Finance to take a look at what is the historical data for this company. Basically, well, there are the dividends right there. Well, let's look at all the dividends. 20, 29, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7. Ooh, look at that. All the way to 2004. So let's take a look at how they pay their dividends. Because for somebody like me, I want consistent increases in dividends. Okay, consistently increasing, consistently going up. So let's take a gander. 10 cents to 13 to 15 to 20. That's consistently going up. 28 to 30 to 34 to 38 to 39. That's nice. Consistent growth. 40, 41. Uh-oh, wait, whoa, hold the phone. From 2000, March 30, 2010, 41 cents. June 28th, 2010, 10 cents. They decreased the dividend by 75%. D-Storm, did you see that? 75% decrease in their dividend. All right, well, let's keep going. That's 2010. 2011, same price. 2012. Okay, so 3 years for them to increase their dividend. So they cut it by 75%. Then took 3 years for them to increase it 10%. So let me see if I get this right. Drop the price 75%. Takes 3 years to increase 10%. That's just, no. How would you possibly think that's a good place to put your money? So 2003, 11. 2014, 11. 2015. Wait, am I reading that right? They cut it, it took them 2 years, and then they cut it again from 11 to 8. That's a 10, 15% decrease. Yeah, I'm going to say no to this. And then look, from 2015. Oh, no, holy shit, they cut it again. That's at 6 cents. Yeah, no thank you. The dividends are absolutely horrible with that company. If you're going to invest your own money, at least come up with a company that is consistently profitable. Not giving you a nice dividend all of a sudden, cut it by 75%. Yeah, no. I turned 5,000 to 700,000 in 4 years. I started a new AC, taken to $1 million under a year. Cool beans, Yoda. Guidance freezing. I'm pretty sure it is cold. Lagged out. Uh-oh, notorious. Not quite sure. All right. Do you know what you call a creative accountant? That's funny. PRCT. Never heard of it. Warner, PRCT? PRCT. Perception Biorobotics. Yeah, that's going to be a no. Two reasons. Number one, it's at the high of the year. I don't buy at the high of the year. Number two, it's a monthly. The numbers just don't work. AZTO. AZTTO. That's going to be no. Forward, FRO. We looked at that one. Okay, user 330. Yeah, we already looked at Ford. AZTO is a no. ATZTO, yeah, no. Intel. Do you have one-on-one classes? A nitrous hickory? Yes, I do. Intel. Stan. INTC. I actually have me some Intel. Ooh, and I like the bounce. Look at the bounce off the bottom right there. I like that. You're going to make most of your money buying low and selling high. Perfect example right here. Let's take a gander. Here's our high back in December. Our low was in September. Where was it a year ago? 37.50. Where is it now? 25. She went up, pulled back, sideways, pulled back, big drop, sideways. Now she's going tending to the upside. Currently at 25 bucks. The 25 is going for 85 cents a share. That's over 3% for the week. 3% per week is over 150% per year. That's crazy. Anyway, I like Intel. So let's take a look. A year ago, 37.76. Topped out at the end of the year at 51.13. The bottom was right around 18.51. Okay, that was a couple of months ago. Look at the movement. Look at the predictability. Okay, down, up, down, up, down, up, down, up, down, up. And she gapped up. Yeah, this baby's going to come down. So Intel, okay, if you don't already own it, in my humble opinion, I got to throw that word in there. In my humble opinion, not this week. INTC, give it a couple of weeks to come down off of that high. Because once you get a high like that after a gap up, yeah, there's going to be some profit taking. That baby's going to come down because you got people like me saying, ooh, I want my profits. Okay, Michael, we already looked at Walgreens. Okay, already looked at it. Intel. OXSQ. Nitrous, really? OXSQ. Dude, I have a funny situation. You're in the wrong place. Okay? Yeah, monthly? No, thank you. All right. Ooh. Kimberly Clark, Procter & Gamble, down due to possible stronger money with election Trump. Question, why? Okay. Let's take a look at Kimberly Clark, KMB. Didn't we already look at Kimberly Clark? We did. We already looked at the numbers. Look at it. Okay, 30 days ago we were here at 142, jumped up to 146, gaps down, keeps on going down, made a new 30-day bottom today. Why did it do that? Don't know. Really not my concern. Why did it do it? Well, I'm waiting for it to find a new bottom. I like Kimberly Clark. As soon as she finds a new bottom, turns around, goes back to the upside, that's what I'm interested in. So yeah, I have it on my radar to look at today, tomorrow and the next day. It might be a perfect opportunity on Monday because I like 2 days to the upside. So if Thursday's up tomorrow and Friday, that's 2 days up. So I like 2 days to the upside. That being said, Kimberly Clark is going to be not for me today. You know, not for me this week. Maybe next week or the week after. Procter & Gamble, I haven't looked at it yet today. Same thing. Great company. Both have been in, wait a minute. Procter & Gamble has been in business for over 100 years. Okay? Great company. They are dividend king. 50 years or more of increased dividends. Why the hell not? I don't know why Facebook is just so awkward today. Yeah, so both of them are going to be no. Why is it? Don't know. Not really my concern as to why. I'm just looking for the opportunity. The only way I can find the opportunity is once the bottom is isolated and then she turns around and goes back up. Maybe tomorrow, maybe the next day. Don't know. Adam Schmidt. Aiden Schmidt. Okay. Aquarius Rocks. Marathon, huh? Mark, how do you feel about energy and what have you bought? Okay, Mark, you get it all wrong. What I mean by all wrong, Mark, is I don't buy concerning, not indices, what do you call that? Sectors. I don't buy as in sectors. I buy basically on the, hold on, I'm getting another video going over here. I buy basically on recommendations from the calendar because I honestly, not my concern about anything else other than when does the company have its dividend date. Because there's only two reasons a stock moves. Well, one is a known reason, another is an unknown reason. So either you know why it's moving or you have no clue. Let me give you an example. Now, do you remember when Exxon Valdez crashed in the Northwest? Yeah, well, Exxon stock dropped like a rock. Same thing happened with British Petroleum. They sprung a leak. Their stock dropped. Apple had a big, huge lawsuit. Their stock dropped. 3M, huge lawsuit against them too. Their stock dropped. When you have something you cannot plan for, an unknown event, stocks have a tendency to go down or up, either way, depending on the news. But it is definitely driven by an unknown event where we can't plan for it. You can only react to it. So what is a known event? Well, a known event is earnings, dividends, stock splits, announcements, something that the company just broadcasts out and say, hey, this is what we're doing, this is what's going on. Okay, this is the new product, this is the new this is the new that. Those are planned events. We can plan for those. So I like the dividend date because a stock has a tendency to go up in value just before the dividend date. These little green dots, each one of these is a company that pays a dividend on those dates. And most of those companies go up before the stock is getting ready to pay its dividend. So that, knowing that information, knowing when a stock is going to move, well, that's valuable. Now, the simplest, safest, most predictable trading strategy is the covered call because you're buying it at a certain price when the stock is getting ready to move just before the dividend date. Sell it to somebody for the exact same price you paid for it and collect 1% every week. That's over 50% per year. It's not difficult at all. Once you isolate what companies you like, make sure you know who they are. I like the Dividend Kings. Okay, 54 companies that have increased their dividends every single year for more than 5 decades. I like the Dividend Aristocrats. Okay, 167 companies have increased their dividends for more than 25 consecutive years. Okay, I like that. Okay, I like the Dividend Champions, 25 years of increased dividends. I like the Dividend Contenders, 10 to 24 years of increased dividends. Those 4 lists right there will give you over 300 companies. And then just for the fun of it, why not throw in Warren Buffett's list? If you respect the man, I do, okay, I take a look at what he's buying, and then I buy the same ones if the numbers work. That always comes down to that. Do the numbers work? 1 plus 1 is going to equal 2 no matter where you come from. All right, that being said, no, I do not go by oil sector or energy sector, transportation sector, raw materials, capital goods, dry goods. I don't isolate. I strictly by the dividend date only. Honestly, there's no concern of mine what the company does as long as they're consistently profitable. As long as they are consistently profitable, I will take a look at them. If the numbers work, I will invest in them. I like the American economy. I like the American people. I like buying American companies to make a 1% every single week. That's over 50% a year. Let's keep on going. Why not, just for the fun of it, let's reboot to see if we can get some more people here. Okay, I'm going to reboot for a couple seconds, see what happened. Drum up some more business, maybe. So if you want to stay tuned, I'll be right back. There we go. Come on. All right, let's do this here. Let's do this there. Uh-oh, come on. Oh, I hate it when it does that. And here we go. And let's try this again. Go live, and here we go. 3, 2, 1. Blast off. Here we go. Alrighty, alrighty, alrighty. So let's change this. Change that right there. Change this right there. Change that right there. Now we're ready to go again. Back to it. All right. Next on the list is going to be OXY, Occidental Petroleum. OXY, Occidental Petroleum. Talking about an oil stock. We were talking about oil stocks just a couple seconds ago. So let's do it again. Oil stocks. All right. Oil stocks, oil stocks. OXY. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Down, up, down, up, down, up, down. Now she's going back up again. Love it. 51.67. The 51.67 is going to be the 52.102. That's 2%. That's cool. Paul Joseph. We're going to take a look at Marathon. Okay, we'll take a look at Marathon. Let me finish up with this one right here. This is Occidental Petroleum, another oil company. I think this is on Warren Buffett's list. I don't know. Could be. All right. A year ago, Occidental Petroleum is sitting at 62.44. Tops out the year at 71.19, and that was in the middle of April. Middle of April. Then she drops. Last week is the bottom of the year. Imagine that, buying at the bottom of the year. The last 30 days. All right, check this out. The last 30 days ago, 56.50 dropped down. Friday was the bottom for 30 days. So what happens? A 30-day high to a 30-day bottom. She bounces up. Got 1, 2, 3 days to the upside. That's an invitation and a half to jump on in. What does the number look like? 51.67 is the current purchase price. The closest strike price to 51.67 is going to be the 52. Well, the 52 currently selling for 103. Well, that's over 2% for the week. 2% a week equals over 100% per year. How does that not excite you? Imagine investing your money and doubling it every 14 to 16 months. That's freaking awesome. And what does it take? 10, 15 minutes a day? All right. Let's move on to the next one. Marathon is going to be next. M-A-R-A. M-A-R-A. Marathon. Look at that nice movement. Marathon. Here's the high of the year. The low of the year. Where was it? Where is it? Look at this. Up, down, sideways, up, down, sideways. Here we are at 1905. The 19 is going for 145. You got to be shitting me. That's 7%. Yeah, 7%. 7% for 1 week. Well, here's the question. The bottom of the year was 844. Okay, that was a year ago. The top of the year, back in late February, well, that's 3409. She drops down to this trading range and just goes kind of sideways all year long. Okay? If you know how to trade a channeling stock, you know, you buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, as you're going up and down, staying within a certain parameter. So you look here and here, between there and there. That's it, sideways, cool beans. Last 30 days, tell me, is this going to be an interesting situation or no? No, not at all. Take a look. 30 days ago, 1650, drops down to 15, shoots up to 19, drops down to 17, back up to make the high at 20, back down, here's your bottom, close to 15 and a quarter, and then shoots back up with a big gap up. Yeah, there's going to be pulled back on that tomorrow, more than likely. Not guaranteed, but more than likely. Okay, now you're an investor. You're here for a reason. You want to see how to make money consistently and safely. Well, if the stock jumps up like this, goes from 15 to 19, that's a $4 increase. Well, $4 increase on a $15 stock, that's almost 20%. That's a nice move for 1 day or 2 days. That's a nice move right there. I would take that profit. Why the hell not? Okay, Paul? Uh-oh. What was that? GPC, Genuine Parts Corporation, UVV. Uh-oh, what's UVV? Tells you I don't trade it. University Corp, yeah. Okay, both of those are a no. But Lisa, those are both great companies. They really are. But they're monthly optionable stocks. The reason I don't like monthly optional stocks is because I only can trade it once a month. And once a month doesn't really work for me. Don't get me wrong, 12 to 24% may be great. But I like 52% per year. And I like doing weeklies because the monthlies, they just don't work. And then it's a real challenge to figure out, well, if this is a 30-day move here, down, up, down, up, down, up. Well, great. Where's it going to be in 30 days? Well, right here, it's at 54.91. All right. Where's it going to be in 30 days? Well, I don't know, but I can tell you in 3 to 5 days, she should be coming back down again because it's at a new high. It's at a new high now, and more than likely it's going to be profit taking. So, does it make sense to jump in when it's at the high here now? No, it doesn't. And then trying to figure out where's it going to be in 4 weeks? Yeah, no. And the fact that the numbers just don't work. So I don't like monthly optional stocks. They got to be weekly. Julian, American Water, huh? AWR. That's a monthly also. It's going to be a no. Amazon for long term, AMZN. Now, it's okay that you like Amazon. Deemed too handsome. Okay, well, alrighty then. No ego problem there, right, dude? All right, anyway. Amazon, I don't like for several reasons. Reason number one, it's at the high of the year. Reason number two, no dividends. No thank you. Okay? Now, they don't pay dividends, so how am I supposed to be able to judge when it normally moves? I'm saying normally. I like to have my life scheduled out, especially with my trading. Well, what am I buying this week? Well, when I say simple, safe, predictable, and consistent, well, I want to know what I'm trading, when I'm trading it, and how much am I making. Well, the strategy I came up with, once you get some decent stocks, and then you throw them into the calendar, well, I know what I'm buying. All right, and when I do a covered call, okay, I know what I'm risking, I know what I'm making. And if I'm doing it every 7 days, and I'm getting 1% or more every 7 days, that's over 50% per year. Consistent, predictable, simple, and safe. And it takes less than 10 minutes. That's why it's called the 10-minute trader. Any video you probably see me do is that, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. So it takes 10 minutes a day, 15 max maybe, to take a look. It's simple. You pick out your stocks, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders. Great. Stick them into a get rid of that. Stick them into the calendar. Okay, stick them into the calendar. The calendar tells you exactly who's paying and when. So if I know that Altria right here is having its dividend on the 23rd, well, I want to jump in 2 weeks before on a Monday. Now, the reason 2 weeks before, because the stock goes up before the dividend is paid. So if the dividend is here, I want to buy it 2 weeks in advance so I catch that run up, so I know that the stock is moving up. So I already know who I'm buying. Dividend Kings, Dividend Aristocrats, Dividend Champions. Every company has increased for more than 20 consecutive years. That means 20 years of consistent profits. Those are the only ones I want. There's 9,754 companies. Why would I look at anything other than a profitable company? Something that has historical performance behind it. If I can leverage that and get 1% every week, that's over 50% per year. I have no problem doubling my money every 14 to 16 months. Simply, safely, and predictably. Remember, this strategy was created for my 9-year-old daughter. Okay, she said, Daddy, please teach me what you're doing. Coach Joel, coming in a little late today, I see. Alrighty, alrighty. So that being said, you get your stocks, whatever ones you like. Dogs of the Dow, S&P 500. You can actually go into your favorite ETF. Go into your favorite ETF and you can extract all the stocks out of it and then trade them individually. Most ETFs don't pay you what you should be getting. All it is just a little bit of education. A little bit of education and you can do wonders. All right, let's keep on going. Next. AWRs is a monthly. That's going to be a no. Garmin. I don't think Garmin actually has weekly options. Well, let's check it out. Back to trade. Back to here. Let's get out of there. GRMN. Is that correct? GRMN. Yeah, that's a monthly. It's a no. Sorry. No, I don't like monthlies only because the numbers just aren't the same. So if you're going to be investing your money, why would you put your money, why would you limit it? Why would you do it once a month when just by making one short little change, get rid of the monthlies, do the weeklies, and you can get 1% every single week, hypothetically speaking, if you pay attention. What is the ticker you're looking at right now? Garmin, GRMN. So user 1294455607064. Ooh. Some of these people, you must be from California with a name like that. IKBR, what the heck is that? IKBR. Anytime I say something like that, yeah, IKBR. It's not in there. Can't even find it. All right, Jordan, that's going to be a no. Uh-oh, I missed a whole bunch. Missed a whole bunch of questions. Mara. Okay, Paul, you want to do marathon? Paul, we already did marathon. M-A-R-A. Yeah, we did it already. Look at that big jump up right there today. Yeah, more than likely tomorrow there's going to be profit taken. Anytime you have a gap up with that big of a movement, with all that volume behind it, yeah, more likely there'll be profit taken tomorrow. So just take that into consideration. Next on the list, GPC, we already did that one. AWR, we did that one. IKBR did that one. Okay, okay, okay. Are you going to trade tomorrow with the talks going on? See, here's the thing. All right, you're new here, so I'm going to cut you a little bit of slack. I do all my trading on Monday. Okay, 80% of all stock options expire worthless. So I want to be on the winning side. What does that mean? I want to have the odds and probabilities in my favor. So if 80% of all stock options expire worthless, well, I want to sell them. Because if you sell them only 20% of the time, are they going to make money? Well, I really don't. It's not of my concern. Okay, I want to make consistent profits. So I sell options. I do not buy them. Okay, and I buy all my stocks on a Monday, sell all my options on a Monday, and hopefully Friday they all expire. Stock weekly options and dividends. Wade, how are you tonight? Jordan, sorry, I'm new to this. What does that mean? Oh, Jordan, I'm not quite sure exactly what does what mean. Okay, so I buy dividend stocks. Companies that have consistently increased their profits to their shareholders consistently every single year, year after year after year. Oh, look at this. I got co-hosts. Sorry, dude, I don't either one of you. Okay, if I knew either one of you, I'd say, sure, come on board and we'll have a chat. I don't know either one, so sorry. If you want to get to know me, drop me your number. I'll give you a call. We'll chat. Okay, deemed too handsome. Uh-oh. Uh-oh, just missed all that. Deemed too handsome, HIMS. What the heck is that? Hims and Hers Health. Yeah, I've never heard of them. What kind of dividend do they pay out? HIMS. Now, for those of you who don't know, the screen behind me right here, this is being broadcast live on YouTube, so it makes it easier to see all those little funny numbers. Okay, so HIMS has no dividends, so that's going to be a no. The reason why I say no, because without knowing when the stock is going to go up, how am I going to know when to look at it? I don't want to look at it every single day, and they have no dividends. So worst case scenario, when, it's not an if, when it comes down, okay, I'm at least getting a dividend payment, and that's increasing every single year. No dividends, no thank you. It's pretty simple. Okay, Michael, we already looked at Marathon. Rhodas, how are you today? All right, way over there. All right, so we looked at him. That's going to be no. We looked at Marathon. That's going to be no. Okay, Jerome Powell is going to have a conference about interest rates. Could care less. Sorry. Oh, can I do MNQZ for no? Fair enough. Glad you like it. Hello, new to the channel. Is Palantir a good long-term stock? Okay, Alex, I'm going to say this once and only once. No dividends, no thank you. If you want to jump into that, you're looking for capital growth, you're in the wrong channel, dude. I'm looking for cash flow. Not really concerned about capital growth. At my age, at my life, at this moment in time, yeah, I need cash flow. That's what my main objective is. I definitely would invest or at least put calls in. All right. Showing really nice information. Thank you, Alex. EMR, Julian Emerson. Let's take a look at Emerson. EMR. Emerson Electric. Oh, hell. No, don't get me wrong. Emerson Electric is on my list, but take a look at this. Okay, big, huge gap yesterday. Big, huge gap today. It is definitely waiting to be picked. Okay, for profit taking. Yeah, that baby's going to come down hard. Because what goes up has got to come down, because you have people who buy the stock. Why do they buy it? They buy it to make a profit. Well, the profit's right there. Gapped up big yesterday, gapped up big today. Well, now's the time to sell, in my humble opinion, of course. Money Mastery. Do I have a course? Kinda yes, kinda no. I have one, but it's so old it needs to be updated. All right, let's move on next. Create one. Axon. I've never heard of them. Micro NASDAQ. Yeah, no. I only do dividend stocks that have consistent history of profitability. TXRH. Venus, how are you today? TXRH. Texas Roadhouse. Okay, cool. No. Okay, monthly. No, thank you. The reason why I don't like monthly stocks, okay, monthly optionable stocks, because the numbers just don't work. Not for me, they don't. Okay. All right. Venus, CLS. What is CLS? CLS. Really? That's a no, too. Check that one out. What do you think? If it goes from $40 to $80, $40 to $80 in, looks like 2 months. $40 to $80 in 2 months. It doubled in 2 months. You're going to have people that are going to ride that wave, or people that are going to jump out and say, hey, 100% profit in 2 months. It's not bad. Sorry if you explained this earlier. Pitt, what is a dividend stock? Oh my goodness. Rodas, hold that thought for 1 second. I got a question over here. What do you recommend is a good dividend stock in your watch list? Easy N, how are you today? My favorite this year is Macy's. Macy's, Nordstrom's, Kohl's, Walgreens. All of them give me close to 1 to 2% every single week. 1% a week is 50% a year. 2% a week is 100% a year. Yeah, I'll trade those things every single week. I will. So over here, Rodas, what is a dividend stock? Oh boy. Okay, at this moment in time, there's 9,754 companies that you can invest in at any moment in time in the stock market. Okay, 9,754. Out of all those companies, half will pay a dividend. That is a portion of the profits. The other half takes the profits and puts it back into the company for capital growth. So there's a question which will probably give you an answer to whether or not this is where you should be, or whether you should be somewhere else. If you're looking for cash flow, dividend stocks. If you're looking for capital appreciation, okay, those are different companies. Okay, so cash flow or stock accumulation, one or the other. Good, thank you. Hopefully doing well. Thank you for answering. Easy in, okay. I forget what your question was, but alrighty. Uh-oh, I missed a bunch of questions. Have to go backwards. Oh, wow. Got. All right, CLS, BRN. Micro. Okay, micro, we already looked at that one. That one's a no. They have some, what do they call it, accounting irregularities they need to situate. Okay. BBVA, Jack, it's going to be a no. BBVA. Yeah, monthly, it's all choppy. No, I only buy stocks that are, let's call them household names. Amazon, no, they don't pay dividends. Thank you. I'm going to look more into that. You got it. All right. So, PBR. What the heck is PBR? PBR. Oh. Yeah. Petroleum Brazil. It's at a 30-day bottom. Actually, it's at a bottom for quite a while. I'd be looking at when is the next up day. I like 2 days to up days from a 30-day bottom. Well, here's your 30-day bottom right here. That's today. Okay, so I'll be looking at it tomorrow, the next day, and the next day, see when it turns around and starts going back up again, because that's all the stocks do. Sir, do you do in-person training? Yes, I do. We're going to be doing live seminars this coming up year. Also, we're going to be doing seminars online too, webinars, live ones. I don't believe in that pre-recorded stuff, sorry. If you want pre-recorded stuff, go to YouTube. Okay, I got a whole bunch of videos on YouTube. All right, that being said. Damn it. Anyway, PBR, what does it normally do this time of year? Well, this time of year, PBR goes down. Yeah, we're going to say no to PBR. Topi, hopefully that worked for you. BBR, GDS, William Macmillan. GDS, what is GDS? GDS. Gold's Holding. Yeah, it's a monthly. That's going to be a no also. So apparently you weren't listening very well. When I say I don't like monthlies because the numbers just don't work, why would I invest at, for 12 to 24% when I can get 50 to 100%? Think about the numbers. Once a month or once a week? All right, let's keep on going. Stable, state-owned, big dividend. Zeke. PBR. Okay, I think we already looked at PBR, Zeke. PBR. Okay. Let's go take a look. PBR. How often do they increase their dividends? All right. Let's take a look at the numbers. All right, Zeke, you ready? We're over here at Yahoo Finance. 26, 21, not off to a good start. 27, 47. All right, look at right here. In 06 to 07, a 50% decrease in dividends. PBR, 50% decrease in dividend. That's like going from $1,000 a week to $500 a week. Yeah, that doesn't work very well for me. Okay, so it cuts the dividend in half, and then holy shit, it cuts it almost in half again. You're shitting me, right? All right, goes up 28, 29, 18, huge discount, another huge discount, big increase. No, fuck no. Sorry, dude. Okay, PBR, the dividends are just horrible. There's 9,754 companies. Why a piece of turd like this? In my humble opinion. Okay, you may like it, may work for you, great. Okay, Farshad, Amazon doesn't have dividends. No dividends, no thank you. Do I do one-on-one trading? Yes, I do. GDS, we already looked at that one. The Gap. Alfred wants to take a look at the Gap. GAP. Interesting. First thing I always check out anytime I look at any stocks is where's the high of the year, where's the low of the year, where was it a year ago, where is it now, what's the direction? Up, channeling sideways. Look at that. That's basically it. Okay, up, down, up, down, up, down, up, down, up, down. Basically the same spot. Not a whole lot of movement. So let's take a closer look. A year ago, the bottom was 1309, topped out at the end of May at 3079. The last 30 days, take a look at the movement last 30 days. Down, up, down, up, down, up. Now she's coming back down again. Sorry, the Gap's going to have to wait at least a week before it's going to be ready. GAP, the Gap. Alrighty. Macmillan, GDS, we're going to look at that one. Luke, Walmart, huh? WMT, WMT. No. That was quick, wasn't it? No hesitation. I don't have to take a second look. No. It's at the high of the year. No, I don't buy anything at the high of the year. It's like standing on a ladder waiting for someone to bring you a taller ladder. No, sorry. Stock with weekly options and dividends. Wait, Carvana. Carvana doesn't have enough dividends. Luke, MetLife, huh? M-E-T. That's going to be a no. Okay, look what happened recently. Okay, 30 days ago, 81, jumps up to 87. That's the high of the 30-day period. Okay, comes down, gaps down, finds the 30-day bottom at 76. Went up a little bit, pulled back, gaps up today, back to where we started a week ago. So if you don't take your profit, market maker takes it away from you. Okay, and he gives it back to someone. Who knows? Yeah, it's going to be a no for MetLife until the price stabilizes. All right? Until she stabilizes a little bit better. The big gap here, big gap here. This thing might be coming back down. I don't know. Is it going back to the level here where it should be? Or is it breaking out of the new level? Only time will tell. GDS, we already looked at GDS. We already looked at PBR. I'm always selling covered calls and puts. Merrick, that's awesome. Sir, do you do one-on-one trading? Yes, I already said yes to that. How about Palantir? Yeah, that's a no. Walmart, please. Got lots. Invest first election year for me. All right, Luke, I get that. We already looked at Walmart, okay? WMT. If anybody taught you anything about numbers whatsoever, never buy at the high. I should say this. I'm not telling you what to do. You can do whatever you want. I would never buy at the high. Because at the high, you're going to have people grabbing profits and then the stock drops. Okay, wait for the stock to drop, turn around, go back up again. PBR is great. Yep, not for me though. Should have listened. GDS, look at that one. Telemedicine. Okay, Jack, telemedicine. I got to know the stock symbol. That stock doesn't sound familiar to me. Okay, it's not like, the Dow, DuPont, ExxonMobil, Phillips 66, Bank of America, Home Depot. Look, it's not like one of those companies where everybody knows who they are. Telemedicine, never heard of them. Okay, Smart Sheet. I can almost guarantee that's an S-M-A-R, no. Yeah, no, monthly. Axon, A-X-O-N. That's a no also. Do you do digital access to teach this with social, other than social media? Yes, I do. I actually have a morning trading group where we trade live Monday, Tuesday, Wednesday, Thursday, Friday. Wait a minute. Monday, Tuesday, Wednesday, Thursday, 9 a.m. Friday, we're on at 2 p.m. because the market's getting ready to close and we want to see where our positions fall out at the end of the week. Okay, SARM. No, we already did that one. Do you recommend automatically reinvesting dividends into the same stock? Crawdaddy, how are you today? Everybody is different. If you want to increase exponentially, yeah, you keep reinvesting the dividends. I take my dividends out and my premiums out once a week in order to be able to live comfortably. WMT got its first investment. Okay, I got that one, Luke. GDS, we looked at that one. PBR, I got 30 in this stock. Okay, probably should have it somewhere else. Zeke. BBVA. Jack, what is BBVA? Didn't we look at that one? BBVA. Yeah, we did that one. That's a no. GDS, no. PBR, no. Walmart, no. Yeah, hey, Jack. Hey, take a close look, Jack. No. I don't know how to say it any other way. I like simple, safe, predictable, and consistent investments. Okay? Now, I like weekly options. I like getting a check every week. Monthly optionable stock does not give you weekly options. It's automatic no. No dividends, no. No weekly options, no. Okay, Luke, we already did Walmart, we did that. WAB. Parker, what is WAB? WAB. WebTech. That's a no. Luke, SCHD, I don't even have to look. I know that's a no. The reason why I know SCHD is a no because people ask me about that every single week. And I tell you, Luke, please check the numbers. Once you take a look at what the yield is, you're going to say no. Once you take a look at the consistency of the profits or the dividends, you're going to say no. Well, I like to think you're going to say no because it's elementary. Why would you buy something from somebody who's not consistently profitable? It doesn't make sense. GDS, we already looked at GDS. Walmart, we already looked at Walmart. We already looked at PBR. Lulu, come on. Lulu does not have 20 years of increased dividends. That's a no. Okay, Dharma Kid. All right, I'm trying to figure out how to say this politely. SCHD. Please check the numbers. All right, I'll check it for you. You ready? SCHD. First thing we're going to look at are the dividends. Now, I want you to pay close attention to the numbers. Number one, 2011 is when I first started paying dividends, not 20 years. Okay? What is that, 13 years? 13 years, not close to 20, but listen to the numbers. 4, 14, 7, 26, 7, 23, 8, 27, 25, 9, 10, 30, 27, 10, 11, 8, 40, 33, 11. Can you explain to me why the hell you think that is good? Now, if you're just dumping money into something for the sake of dumping money into it, fine. More the merrier, you know? But if you're looking, you're definitely not like me. I need a consistent, predictable weekly income. SCHE doesn't do it for me. But wait, it gets worse. Really, it does. So let's take a look at the summary. Now, the summary of the numbers for Schwab SCHD, 3.46%. Did you hear that? 3.46% for the year. You're dumping your money into a company that's giving you a rate of return of 3.46. You can give your money to the federal government and they'll give you 5%. So what the hell are you thinking by putting your money into something that's giving you 3.4? It's a numbers game. Okay, you're taking your hard-earned money that you worked for. You're putting it into a company that's giving you shitty-ass returns. Okay, 3.4. No, in my humble opinion, that's not as good as 50% per year. But what the hell do I know? I didn't go to college. But I do know, sorry. Energy transfer, Dana, the options are crappy on energy transfer. SCHD, Luke, we just looked at it. Oil stocks pay dividends, your thoughts? Kicking it? Kicking it, you're absolutely right. They do pay good premiums and good dividends, okay? But I don't isolate my stocks that way. I isolate my stocks by when they pay their dividend. Okay, look at here. DVN, Devon Energy. Kohl's, they sell clothing. Hey, Macy's, they sell clothing. Merck, MRK, what is that? Pharmaceuticals. And then Vail. I don't even know what Vail does. What are they? I don't even know what Vail does. Okay, I don't isolate by industry or by sector. I invest specifically by the calendar. If they consistently increase their dividends, great, they go into the calendar. If they have weekly options, they go into the calendar. Okay, Topi, you asked me that question already. Do I do in-person training? Yes, I do. All right, let's keep on going. What are the best dividend stocks? The kind that pay you money consistently and consistently increase. I would say the best dividend stocks, dividend kings, dividend aristocrats, dividend champions. That's your 3 top list. That's about 150 companies right there. SoFi, good long term? I'm going to say no, not for me. Okay, long term for me is 30 days. The longest I've ever held anything. And I've been investing for 20 years. Longest I've ever held anything is 9 months. That's it. And that was Kimberly Clark. Okay, Zeke. I already did PBR. And I already said no to PBR. SoFi is going to be a no. Okay? Check it out, Zeke. PBR, already did. Jared. Hi there. What about your thoughts on Coca-Cola now? I like Coca-Cola. I always have. You know, they've been in business for over 140 years. They consistently increase their dividends every single year. Okay? Right now, the high is at 74. The bottom's at 56. Shoots up, pulls back. Who knows how far it's going to drop? Okay? Why would I want to jump into Coca-Cola? Now, I'm going to keep my eye on it. But look at the drop in the last 30 days. As soon as she finds the bottom, turns around, at least 2 days to the upside. See, she tried turning here. There's a bottom, 1 day. Nope, didn't do it. Bottom here, 1 day, didn't do it. Bottom here, 1 day, didn't do it. I like 2 days the upside. I will jump in on the 3rd day, most likely. But it depends. But Coca-Cola, 63.83 to 64 is going for 58 to 62. Not quite 1%. Sometimes they pay decent, sometimes they do not. So, considering it's in a downturn, no thank you. Considering it's not 1%, no thank you. So it's going to be a no for Coca-Cola. Sorry, Jared. Okay, Zeke, PBR, no. Okay, is it Hassan? AT&T? Well, let's take a look at AT&T. Here we go. It's going to be a no. Reason being, it's at the high of the year. I don't buy at the high of the year. That's the very first thing I want to look at. The high, the low, where was it, where is it, which direction it's going. It takes less than 2 seconds to see it. High, low, was, is, and direction. Doesn't take that long. What do you use to track your dividends? Temptress Talent Hub. Interesting name. Now, what do I use? I go over to the monitor chart, and then I look at account statement. Then I get out of that crap right there, and I go like this. All right? Profit and loss year to date. And I click on that. 1, 2, 3, 4, 5, 6. But no, wait. I still have that one, and I still have that one. 4. I lost money 4 times this year in this account. Now, I have 6 accounts. I share 3 of them with you guys. I've lost 4 times this year out of all those trades. I show all my trades every day. Where are they? Right here. Okay, here's my website, The 10-Minute Trader. Here's all my trades. Every single trade I do, I post it. Okay? Walgreens, Macy's, Marathon, MPW, and Riot. This week. Okay, it's week of the 9th. That was a couple of weeks ago, and I got 1.86% that week. Okay, I haven't done the math on these 2 yet, but I'll get to it. It's, one of those things. All right, so that's how I track my dividends, if I'm profitable or not. I actually go to the account statement and it tells me, am I profitable or am I not? Okay, Luke, we did Walmart. Okay, William, GDS, we already did it. Josan, we already did AT&T. Is this the original Ant-Man? No. What do you think about Morgan Stanley? Danielle Diaz, Morgan Stanley, MS. MS. No. No, no. Look at this. The high today. A year ago, the bottom. Yeah, it's going to be a no. Like, zoom into that. Watch this. You ready? Look what happened today. Big gap up, new high of the year, new high of the 30-day period. Yeah, this is going to be profit taking. No thanks. Walmart, Luke, we already did Walmart. CTAS. CTAS. No. It's a monthly, number one. Number two, it's at the high of the year. I don't buy at the high of the year. Morgan Stanley, Danielle, we already did Morgan Stanley. Simeon Sumler. Simeon Sumler. SM. What is SM? I know what SNM is, but SM is SM Energy. It's going to be a no. Okay? Monthly optionable stock? No, thank you. Okay, Josen, we already did that one. Or is it Hosan? I don't know. Temptress. Do you track your dividend yields on Excel? What do I use? I just told you what I used. Okay, Temptress Talent Hub, I use the, what do you call it? The account statement, right there. That's it. I make 1% every week. When I make my 1%, I pay my bills. Other than that, I don't track it. I don't know if that's weird or not, but it is what it is. Have you heard of MSTR? I have, and it's a no, MSTR. Okay, now it looks good here, but if we go over to Yahoo Finance and put in MSTR, it has no dividend and no yield. No dividend, no thank you. Sorry, MSTR, that's a no. Yosan, we already did that one. Did that one, did that one. Energy Transfer, nope, that was a terrible. Morgan Stanley, we already did that one. Cato. Oh. Uh-oh, where were we, We're at Cato. Cato wanted to take a look at something. Oh, wow, I'm way behind, aren't I? CTAS, Marathon. Rich, yes. OKLO, hell no. Coney, hell no. HPE, what the heck is HPE? HPE. Hewlett Packard. Interesting, Hewlett Packard. Let's take a gander. You ready? High, here's the low, here's where it was, here's where it is. Look at this. Up, down, up, down, up, down, up, down, up, down. Now it's going to the upside. Cool. Let's zoom into the last 30 days, see what it looks like. Interesting. It's going to be a no, the 30-day high. She goes up, pulls back, up. Look at the gap here. That's going to fill in tomorrow, the next day, sooner or later. Tesla is going to be a no. Sorry. Dietz Hayes wants to take a look at Apache. APA. I like Apache. But look at what she's doing. Okay? A year ago, 39. Now she's at 22. Okay, down, up, down, up, down, up, down. Now she's bouncing up again. Cool. Let's take a look at the last 30 days. Look at the last 30 days. Up, down, up, down, up, down, up, down. Now she's going up. Cool. I like that. Let's take a look. Okay, Michael, should you invest in Tesla? I can't answer that question for you. I don't like Tesla because they don't pay dividends. Okay, so you're looking for capital appreciation. There's a huge difference between capital appreciation and cash flow. Huge difference. I'm retired. I lean towards cash flow. Simple, safe, predictable, consistent. I like safety and predictability. Okay, I'm not young anymore. I can't, well, I could, but I'm not going to. I've been working since 1973. I have no desire whatsoever to go back into the workforce. I don't. All right, so Apache. 30 days ago was the 30-day high at 27.50. Okay, 23 is the bottom. Look at the numbers now. 24.48, the 24.50 is going for $1. That is a that's right, 4%. Holy cow. 24.50 is going for $1. That's 4% if you like Apache. Well, look, 30 days ago, she's here. 30-day bottom was Thursday. Well, sorry, it was Friday. Monday, it's up day. Tuesday, up day. Wednesday, up day. That's 3 up days in a row. That is the new 30-day bottom. Definitely going towards the upside if you like Apache. So let's take a look at a covered call on Apache. Okay, going to change this to covered call. 24.50. Let's do just one contract. Make it easy for y'all. At the market order, there we go, and off to the races. Here's what it sounds like. Buy one covered call against APA 100. Those are the weeklies. 15 November 24th, that's this coming Friday. Not the day after tomorrow, but the next Friday. The $24.50 call strike against the stock at the market open first thing in the morning. Here's my break even. 23.45. Well, the current price right now is 24.48. So we got profitability already built into this trade. That's why I like predictability and consistency. So as my break even, the profit on this trade is $105 per contract. Okay, so $105 is my profit. Well, how much is one contract costing me? $2,345. 2,345. That comes to a grand total of 4.47. That's nice. That's 200% per year. 4.47% per week. Okay, I like simple trades. APA looked good, but what does it normally do this time of year? I had to go back to the beginning, back to where we were. Okay, so let's move this over a little bit. Let's take a look at the seasonality chart to see what does this stock normally do this time of year. Well, here's the seasonality chart. All the way to my left, January 1st, all the way to my right, December 31st. That's the whole year. The blue line represents the movement this year. Okay, down, up, sideways, down, blah, blah, blah. This blue dot right here, well, call me Muzam. Okay, now, sorry. Here's where we are. Here's what the next 30 days should look like. Let's zoom on into that. Weekly, not monthly. Got it. Yoo-hoo. What are you doing up so late? So next 30 days, what does it look like? Well, you really can't mix this up. Look at that, going down to the downside. Now, that is not guaranteed. That just what did it do last year, the year before, and the year before. So on and so forth. Okay? Now, I have a little bit of controversy in the questions. Okay? So apparently, Mr. Singh, is that right? S-I-N-G-H? That Mr. Singh? I don't know. Yield 150% on Coney. Yeah, I get that. I know that. Let's take a look at Coney. C-O-N-Y. First off, okay, see if you can follow the numbers. 1 plus 1 equals 2, 2 plus 1 equals 3, so on and so forth. Okay, so numbers are really interesting. So pay attention. Number 1, it's a monthly. No thanks, I don't do monthlies. Number 2, let's go to Yahoo Finance and put Coney in there. C-O-N-Y. Okay, so Mr. Singh, or whatever, the yield 168. You said 150. It's actually 168% is the yield. But what you're missing, go down to historical data. Okay, So you're looking only at part of the equation. Okay? Part of the equation. You're not looking at the whole equation. All right, now I want to take a look at historical pricing on dividends to see how well they increase their dividends every single year. So let's take a look. Look at all the dividends they paid out. And am I reading this right, Mr. Singh? Mr. Singh, correct me if I'm wrong. Am I reading this right? Their first dividend is October 2023. That means they've been paying for 1 year, and you think just because the yield for 1 year is good? Yeah, sorry, you be my guest. I like historical performance. There is no such thing as historical performance with a 1-year-old company. All right? But anyway, let's take a look at the dividends. Okay, 121 to 108. Well, that's dropping it. That's going backwards. 246, 169. That is more than a 50% decrease right there. 108, 166, 279, 228, 170. Another huge drop. Another huge drop. Another huge drop. Yeah, no. Okay, you can do whatever you want. You ask my opinion. For me, it's a no. I'm here for consistent, safe, predictable 1% per week. Safe. 1-year-old company, in my opinion, is not safe. Most companies never make it past 3 to 5 years. You want to invest in that? Be my guest. Be my guest. You got nothing to lose. Won't you let me take you on a sea cruise? Hater Judd. I have no idea who you are. See, it's interesting. People want to join me, but I have no idea who they are. So 11:30, 12:30, 1:30. We've got another half hour to go. If we can get up over 200 by the end of, midnight? Then we'll do that. Okay? That being said, energy transfer, no. So sorry, Mr. Singh, whatever it is. Yeah, Coney is a no. I don't do monthlies. The numbers just don't work. You're getting 150%, great. Everybody gets 150% or 200% the first year. How else are they going to suck you into a piece of crap like they have? But that's just my opinion. What the hell do I know? Anonymous, what's around the $70 range that you sell cash secured puts on? Holy cow. Let's take a look at the watch list. Okay, so we have, okay, I don't know if you can read this or not, but look at all these companies. Okay, 1, 2, 3, oh, a whole bunch of them. That's a whole bunch. That is a lot of stocks under $70 that are dividend contenders, which means they have increased their dividends from more than 10 years to 24 years. There's a whole shitload of them under 20 bucks. Okay, energy transfer, no. And Grace, N-O-V, oh, N-O-V, N-O-V, what is that? N-O-V Inc. Sorry, kiddo, that's a no. I don't do monthlies. The numbers just don't work. All right? Now, if you can get 1 or 2% every month, great. That's 12 to 24% per year. I like 50% to 100% per year. Okay, you do the math. Monthly, weekly. Monthly, 12 to 24%. Weekly, 50 to 100%. I don't know. Arnold, how are you tonight? Macy's. All right, Michael, Tesla. I don't do Tesla. They don't have dividends. No, thank you. Yeah, monthly. That's right. Robert, I like Macy's. It's one of my favorites this year. Let's take a gander at Macy's. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Up, down, sideways, down, sideways again. 16 bucks at this moment in time. I thought you ended at 11:30. Yeah, I got booted off for 3 days. I'm making up for lost time. Okay? So apparently, I said something that upset somebody, so they booted me off until after the elections. Apparently, they don't like my opinion on Pelosi and all those crooked Congress people. Whatever. All right, Macy's, great. Currently at 16. The 16s are going for 47 cents. Okay, 47 cents. That's 16. That's over 2%. Close to 2.5%. If you like that company. You like my opinion? Thank you there, Arnold. So, I like Macy's. Let's take a look. A year ago, the bottom, 10.54. Topped out at 22.23. The end of March. From there, she drops, goes sideways. Look at the last 30 days. 30 days, 30 days. Right here we go. Last 30 days. Down, up, down, up, down. Now she's going up, but look at this big gap right here. That would make me just a little nervous. Only because I have Macy's. She shot up. Well, it all depends on what stock option I sold against it, because I always sell stock options against my stocks. Okay, Mr. Singh, you already told me that it's 150%. It's actually 163% for Coney. I get it. I understand. I don't do companies that are a year and a half old. Okay? Most companies don't make it past 3 years, 3 to 5 years. You want to put your money in Coney? Be my guest. Nathaniel, E.T. Don't get me wrong. Energy Transfer, nice movement, nice dividends, but look at the premiums. Okay? Look, this is important to me. Now, I don't know what's important to you, but what's important to me is simple, safe, predictable income. Safe, predictable, consistent income. That's what I'm looking for. At the money right now, 14 to 19. That's your 1%. One strike out of the money, 3 cents. 2 strikes out of the money, nothing. Energy Transfer has horrible premiums. I will never do Energy Transfer again. 2 strikes out of the money, you're getting 0. Yeah, no thanks. Okay, Diaz, we already did APA. What about REIT dividends? Well, some REIT stocks are good. Some of them aren't. Okay, so give me one that you think is good. I'll take a look at it. I'll give you one that I like. MPW. Okay, that's a REIT. Look at the movement. Okay, here's your high, 650. Here's your bottom, 3. Okay, down, up, down, up, down. Right now, she's getting ready to turn to go to the upside. That's not what I look for. Look at this right here. 459. The 450s are going for 32 cents. So I lose 9 cents off of this. So you take the 9 cents off of that. That would be 23. 4 goes into 23. 4 goes into 23. 5. Almost 5 times. 5% trade if you like MPW. It's one of the few REITs that I do. I'm strictly numbers person. Now, I wouldn't buy it now because look what she's doing. Okay, she's coming down, up, down again. It's at a new 30-day bottom now. So MPW is, I'm going to write it on my list for next week. MPW. All right. Do you have a recent example of a yes? I just gave you one. Okay, Gracie. When you click into a stock, the white lit up screen blinding, impossible to see any text for your information. Cato, yeah, you told me that. Okay, this here is Thinkorswim. It's a trading platform. When I go over to Yahoo Finance, it just happens to be in all white. I don't know how to change it. Settings, zoom, bump, downloads, extension, bump. Settings, here we go. It's not giving me. Printed language download. All right, that's not working for me. Settings. display. Yeah, see if I do that, I can't read it. All right, you're just gonna have to deal with it. Sorry, dude. I'm gonna do the best I possibly can. Do I have an example of a recent? Yes, I just gave you one. MPW. T. All right. What am I looking for? Andrew, what I'm looking for is a simple, safe, predictable, consistent way for me to gain a 1% per week with my trading. 1% a week is over 50% per year. What about Altria? M-O. M-O. Okay. Big fat no. Reason being, look where we are. Okay. High, low, high again. I don't buy at the high. Okay. Altria would be good in a couple of weeks. 54.32 to 55. That's going to be a freaking no. Sorry. Look at the numbers. It's currently at 54.32. The closest strike price is going to be the 55. That's 23 cents. Or this is 54. Yeah, no. The numbers just aren't working. Sorry, Altria is going to be no. What goes up? Why are you up? Why am I up? Well, because I got I got a slap from Google. They banned me for 3 days, and my ban lifted at 11:30 tonight. So I said, what the hell? I'm going to put my 2.5 hours in at 11:30. MTN, Vail Resorts. MTN. It's probably going to be a no. Oh, imagine that. Why is it a no? Monthly options. Monthly options, the numbers just don't work for me. I like weeklies. It pays better. It's like you're going to go for a job. Why would you go for a job at $5 an hour when you get one for $10 an hour? Why would you take one at $10 an hour when you get one at $50 an hour? It's all a numbers game. Emmy, we already looked at Chevron. CVX, we looked at. How do you time your covered calls against the EX date within 30 days? World Map, how are you doing? Okay, World Map, the question, how do I trade by the EX dates? Well, here's, how about we change it? It changed up a little bit. Okay. Here is where we are at this moment in time. November 2024. We are on the 7th. Right there. Ford has its dividend today. Today meaning, when the sun comes up. How I judge when I buy mine, 2 weeks prior to the EX date. Look at Microsoft. Okay, Microsoft right here. If I was going to buy Microsoft, I would buy it 2 weeks on a Monday. All right, I'd buy it first thing in the morning at the market open, and I would sell a covered call at the market open. I honestly does not concern me as long as the chart is telling me she's in an upward trend. Because your trend is your friend right to the end. I'm looking to have odds and probabilities in my favor. Oh, gotta check this, make sure I'm a real person. There we go. All right, that's how I time it. T, we already did that one. We already did AT&T. Oh, Deep Bleaker, ARCC. All right. ARCC. That's going to be a no. Deep Bleaker, the reason why it's a no, monthly. Look at the premiums, 0, 0, 0, 0. Yeah, no thank you. I don't do monthlies, and I especially don't do companies that have zeros. Okay, Michael, MDV. MDV. No idea. That's a no. No dividends. Wait, no, sorry. No options. Yeah. NOV. No. Altria. We already looked at Altria. That's going to be a no. Coca-Cola. Already looked at Coca-Cola. Okay, so when I say this screen here behind me, this big, huge screen behind me, is live on YouTube and being recorded. So if you want to go take a look at the beginning. Follow it all the way through. Okay, so we went 11:30, 12:30, 12:30, 1:30. We got another half hour to go. All right, well, let's keep on going. S. Do you get dividends even while owning just options? No, you actually have to own the stock in order to qualify for the dividends. Find the time. SVOL. Never heard of it. SVOL. That's a no. Jimmy, you're about to lose a shit ton of money, buddy. Wow. Cool. Jimmy, I'd like to know your thoughts on that one. Reason why I'm saying that is I was trading during the crash in the 2000s, okay, the dot-com bust. I was trading during that. I was trading during the financial crisis in '08. I was trading in the pandemic, okay? Yeah, I haven't lost shit yet. But I appreciate your concern for my well-being. Thank you. Deprenda, we already looked at Microsoft. Emmy, already looked at Chevron. Lachelle, O Realty, that's going to be a no. Okay, monthly optional stock, no. Okay, I don't know what you guys don't understand. That monthly is a no. It's just the numbers just don't work. Okay, what do you think about CRDW or Oracle? Well, I like Oracle. CRWD, CrowdStrike, isn't that a no? Hold on a second. CRWD. Yeah, no dividends, no thank you. Oracle, that's on my list. Okay, ORCL. Okay, but it's going to be a no for this week. Okay, Navitica, well, I didn't even read that name. Okay, yeah, it's a no for this week. Look where it is. Don't get me wrong, look at the movement from the low of the year at 100. Well, now it's at 180. That's an 80% increase. That's way too much profit taking available for me. Okay. Spencer, JELQ. JEL, I never even heard of that. JELQ. Okay, you definitely got the wrong ticker symbol there, dude. JELQ. Sorry, Spencer, it's not popping up. Procter and Gamble. I got to go backwards to see some of these I missed. Energy Transfer. Get it, got it, good. I have KMI, Kinder Morgan. Okay, Kozak, Kinder Morgan. KMI. Kinder Morgan's going to be a no. Kinder Morgan's MLPs are locking RT. Is it even better? Well, Kinder Morgan had a nice jump up today. But you have to ask yourself a question. When it jumps up like it does, do you stay in it or do you say thank you very much? All right. Kozak Tracks. You got the 27 call for November 15th. Well, it's only worth, it's only worth 14 cents a share. Okay, I have no idea what you got in at. But at 14 cents a share at this moment in time, if it's a profit, it's a profit. If it's not a profit, it's not a profit. And it ain't a profit until you take it. Which platform are you using? This is Think or Swim. By TD, it used to be owned by TD Ameritrade, but now Charles Schwab owns it. Okay, I've been using it for 20 years. I've been using it ever since the original programmer programmed it. He sold it to TD Ameritrade. TD Ameritrade got bought out by Chucky. Now Chucky owns it. No Limit Debo. No Limit Debo, how are you this evening? Antel. I never heard of Antel. I've heard of Intel, but not Antel. A-N-I-N-T-C. This is what I'm just going to make the assumption. Now, I do have some Intel. I like Intel. Kent, aren't covered calls for sideways and down for the stock, so why are you buying at the bottom? Well, Kent, the reason why I buy at the bottom, because you're going to make most of your money when you buy low and sell high. Okay, I don't know if there's any other way around it. I mean, you buy high and sell low, that just doesn't make any sense. So at the bottom of the year, the bottom of the 30-day period, bottom of 60-day period, as it hits bottom, turns around, goes up, well, the stock is moving up. More than likely, I'll be back to all cash, and my position will be filled, and I will get my profit, which is what I'm looking for in the first place. All right, Intel. Here's the high, 51. Here's our bottom, it's at 18. Okay, up, down, sideways, down, sideways, down, sideways. Now she goes to the upside. Look at the last couple of weeks. Okay, down, up, down, up, down, up, down, up, down, up. Yeah, it's going to be pulling back. Intel is one of those ones you kind of like sit back, watch, see what happens. Okay, so Kent, sorry if you don't agree, but it is what it is. Nav erosion. Loud Dog, what's happened up? The gym. You probably have great info, but your TV is washing out the entire video. Can't see. Okay, not 100% sure what you're saying about that, but here's the thing, Jim. This is being recorded on YouTube. So if you are trying to watch this on your phone or your iPad, yeah, more than likely it's not going to come out the greatest, especially when I go to Yahoo Finance. If you know another financial website that's dark screen, not a white screen, I'll be more than glad to take a look at it. But where else do I get historical data? What does Google Finance look like? Google Finance. Google Finance, here we go. It's basically the exact same thing, white background. Unless you know of another financial website that's not all white background, I'll be more than glad to take a look at it. But until then, we're stuck with what we're stuck with. But Jim, if you really want to take a look and really want to understand, use your laptop. Don't use your phone, don't use your iPad. Your laptop or your big screen TV. And a lot of people in the audience that sit on that comfy couch, watch on the big screen TV, have some popcorn, a beer, soda, brandy, cocktail, whatever, and you'll be able to see the numbers easier. You can't see the numbers on a laptop or an iPhone. Wait, you said Coney is bad. Yeah, B-Ting, I did. Okay, now let me explain to you why Coney is bad. Okay, BB Ting. Okay, Coney, C-O-N-Y. Number one, it's a monthly optionable stock. Okay, I don't like monthly optional stocks. The numbers just don't work out. And trying to figure out where it's going to be in 30 days, that's 4 weeks away. What does 4 weeks look like? Okay, that's what 4 weeks looks like. Okay. Here right now, I'll try this way. Here right now, okay, here's 30 days. Up, down, up with a gap. Okay, great. Now tell me where it's going to be in 30 days. I have a difficult time enough to see where it's going to be in 5 days. But 5 days, this thing should be down here around 450. There should be profit taking next week. Usually. Because when you have a gap up this big with all that volume, 2 days to the upside, yeah, there's going to be profit taking. That thing is going to pull back. That's reason number one. Reason number two for Coney, I don't know where anything is there. C-O-N-Y. Now, as I was saying, this screen here is live on YouTube. go to your laptop, go to your whatever you want to call it, and take a look. Okay. Number one, the dividends are absolutely horrible. 121, 108, 246, 160, 269, 108, 166, 279, 228, 170, 157, 101, 104. Consistently going down, up, down, up, down. There's no consistency whatsoever. Okay, but wait, it does get worse. BB Ting, this is the why I don't like it. Okay, look at your yield. Your yield is 168% per year. Why do you think that is? Seriously, think about it. Why do you think they're paying out 168% in dividends? They're a 1-year-old company. They need to suck you in to get your money from you by promising you something they cannot continue to deliver. All right? Their yield, 168. Year-to-date daily total return, 1.8%. That does not sound good at all. 1 year of dividends? Yeah, no thanks. I like companies that are consistently profitable. There's no consistency to this company whatsoever, and they're a new company. Okay, BB Ting, that's my opinion. I like companies that are consistently profitable. Whoa, you're still streaming. I thought you were done at 11:30. No, I got booted off for 3 days, so now I'm making up for lost time. I don't want people to think that, I neglected them. I'm not sharing my information every day. Well, I am. It's just that last night and the night before was very challenging, and there was no interaction, so it was a little complicated, and it made me a little uncomfortable. So, but my ban got lifted at 11:30 tonight, so I said, why not? Let's just jump in and go from 11:30 until 2. All right, Christopher, DRI. What the heck is DRI? When I say something like that, you know it's going to be a no. Okay, DRI. Sorry, Christopher. I don't like companies that have monthly options. Okay, I got to get me a sign that says weekly options only, no monthlies. Can I do Pfizer? Jargod. Is it Hargod or Jargod? I don't know. Pfizer, PFE. Interesting. Take a look at Pfizer. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Down, up, down. 27.39. The 28s are going for 9 cents. The 27.50s are going for 17. No, the numbers just don't work this week. Don't get me wrong. I love Pfizer. I buy them a lot. Okay, they have a dividend every 90 days, so every quarter. We're in the 4th quarter now. Seriously, we're in the 4th quarter. So yeah, the numbers just don't look good today. So that's going to be a no. Put it in dark mode. Yeah, I did put it in dark mode. See, come over here, go to settings. Where's settings? Settings. Come down here. Okay, put it into dark mode. See, there you go. Alrighty. That's your dark mode. What do you think? Is that dark? See? Is what it is. Okay, Ford's headed up. We already looked at Ford. Do you make bank? I make 1% a week. Well, actually, I make over 1% a week. But, that's 50% per year. PBA. We already looked at PBA. We already did Pfizer. We already did PBA. Mindy, how are you? Back again, Mindy. How you doing? What are you looking at here? B-Mart. We're looking at companies that have consistently increased their dividends so that we can leverage the trade in our favor to get a 1% simply, safely, predictably every single week. That's over 50% per year. User 8031913 blah, 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 blah. I want you to take a look at Main, M-A-I-N. It's going to be a no. See that? I don't think he pays us any attention on TikTok. Draco, I don't pay any attention at all. XRP, please. XRP. Isn't that something to do with cryptocurrency? Cannot find that simple. Oh, Ripple. Yeah, no. Sorry. PFA, yep, did all those. Hi, did you get into CSX today? CSX. I don't think so. No, I didn't get into CSX this week. Main PBA. What about Baxter? Ooh, I love Dory. BX. Baxter and Blackstone. No. Only reason, look where it is. It's at the high of the year. Had a gap up, a lot of volume. 176, the 175s are going for $4. Well, not quite 2%, but pretty close if you like Blackstone. I thought it was Baxter, but no. There's a whole lot of Mexican going on. Okay. Now, what does this company normally do this time of year? Seasonality tells us basically just goes sideways. Basically, no big surprises. Just sideways. No, flat. Nice, steady pacing along. Change that back to standard. There we go. Now, Tyler, D-O-G-E. Yeah, Doge. Yeah, no. All right, I'm going to see if I can go through all these questions. Main is a no. M-A-I-N, no. Microsoft, we already looked at. XRP doesn't have 20 years of dividends. PBA, we already looked at. BX, we already looked at it right now. It's at the high of the year. Take it up. Take a look. Okay? Blackstone's at the high of the year. I don't buy at the high. It doesn't make a lot of sense. Coin pays dividends? Doesn't really. I don't think so. AT&T. The yield max funds are no-go for you. That's absolutely correct because they don't have 20 years or more of increased dividends. AGNC. I like that one. Matthew. I love Walgreens. IRM. Is that in real money? I don't know. What is IRM? IRM. Iron Mountain. Monthly. No. Is YMAX a good dividend stock? YMAX. No. In my humble opinion, it's no. Trading View. Every tweet. Yeah, no. I don't use Trading View. Sorry. Where do you get the seasonality data? Emmy, it's right here in Think or Swim. Now, if you don't know, this is Think or Swim. It's a trading platform offered through Charles Schwab. I've been using it over 20 years. I love it. I don't like anything else. I mean, I've looked at, I think, 15. I wrote a book 15 years ago. I looked at about 15 to 20 different trading platforms. This is the only one that had everything I'm looking for. Yeah, it's right on seasonality. All right, Matthew, can you elaborate on your take on staying away from monthly optional dividend stocks? Colin, I have nothing against monthly optional dividend stocks. Nothing against it whatsoever. It's monthly optional dividend stocks. The reason why, okay, if I buy it today, 1768. The closest strike price is going to be the 18. It's paying 5 cents. That doesn't work. Okay? So let's go out to the next one. So the next one, not January, December. December's 18 is going for, does that say 0? Okay, 0 to 25. Even if I get the 25, that's not 1%. But I have to carry it for 43 days. That's 6 weeks. 6 weeks and not even getting 1%. Yeah, no. Okay? Because the monthly optional stocks are usually 1 to 2%. The weeklies, about the same, 1 to 2%. So would I like to get 1 to 2% on a monthly basis or 1 to 2% on a weekly basis? So on a monthly basis, it's 12 to 24% per year for a rate of return if you averaged it out all year long. Weekly options, it's 50% to 100% rate of return. So it's just a math problem, okay? But do you see the movement of the last 30 days? Let's go right here, okay? Let's get this out of the way. That's the movement for the last 30 days. Down, up, down, up, down, up, down, up. Great. Now, tell me where it's going to be for the next 30 days. Look at all those. So you're going to take that and then you're going to extend it all the way out and then let me know where it's going to be. Okay, I don't like monthlies. They're too difficult to predict. The numbers just don't work. That's it. That's two good reasons right there. Too hard to predict and the numbers just don't work. Do you show how to do this from the start? And, well, that's what I've been doing all night. Okay, number one, pick a bunch of stocks. Okay, I like Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's 5 lists right there. Go to Google, Dividend Kings list 2024, Dividend Aristocrats list 2024, Warren Buffett's list 2024. That's over 300 companies, those 5 lists. You take those and you throw them into the calendar. Let's get rid of this. Throw it into the calendar. The calendar tells me what stock is paying a dividend that day or that week. I like 2 weeks before. So if we're right here, okay, next Monday, the 11th, I'm going to be looking at these stocks here. Johnson & Johnson, KGC, NEM, DuPont, Dow, Coca-Cola. Okay, I have a bunch of lists. Okay, so I'll be looking at 10 or 15 different stocks, and that is it. Because they have their dividend coming up. When they have the dividend coming up, the stock has a tendency to increase in value. When it increases in value, it makes my job so much easier. Only real traders are up right now. Fair value Gary, how are you today? So that being said, once you get your list, stick it into a calendar. Great. Now what do? Well, next step is checking the charts and checking the numbers. First thing I want to do, let's go put in Macy's just for the fun of it. First thing I want to see every time, okay, this is step number 3. Step number 1, pick some stocks, put them into a calendar. Step number 2, what's paying a dividend the upcoming week? That's step number 2. Number 3, check the chart. High, low, where was it? Where is it? What's the direction? Up, sideways, down, sideways. Here's where we are right here. What am I buying it for? What am I selling it for? What am I getting a rate of return? It's currently at 16.09. If I buy it at 16.09, sell it at 16, okay, I'm collecting 47 cents a share. But if I'm losing 9 cents here, you take it out of this. So now I'm walking away with 38. Walking away with 38 cents. 38 cents is more than 2% of 16. That's a 2% trade. The numbers are very simple. Once you zoom in, great. Well, here's where it is now. Is it the right time to buy? Unfortunately, it is not. Right? 30 days ago, we're 1540. We dropped down to 1520, shot up to 1660. Now we're at a 30-day bottom. Yesterday, big gap up, jumping up. Okay? If I was going to do a covered call on this, I'd get rid of that. Change it over to covered stock. The current price is 16, so let's buy the 16s right there. Let's do just 100 shares so people don't freak out about the numbers. I like to buy it at the market open first thing in the morning because when you're doing a covered call trade, you're buying the stock and selling the option at the exact same time. They are tied together. I already know what my profit's going to be. Consistent, predictable, and safe. Buy one covered call Macy's, 15 November 24. That means it expires on next Friday. The $16 call strike against the stock at the market order at the market open. $39.50 is the profit for one contract. So $39.50 50 is the profit. What is it costing me? Well, the cost of the trade plus commission is 1,561. 1,561. That gives me a grand total of 2.5% for the week. Okay, the numbers are all right there. Numbers don't lie. So if I do this trade first thing in the morning, there you go. You take all the stocks that you like, Dividend Kings, Dividend Aristocrats, Dividend Champs, put them into a calendar. The calendar tells you when to buy. When to buy is based on 2 weeks before the dividend date, because stocks go up before the dividend date. Great. Now check the numbers. How do the numbers look? What are you buying it for? What are you selling it for? What premium are you collecting? Mo Sekabo. Yeah, I have no idea who you are, brother. But I do appreciate you wanting to jump in. Okay. Roxy, how are you doing? Here's the chart. Is it the right time to buy? Where's the 30-day high? Where's the 30-day bottom? What does it look like over the last year? Where is it trending? Those things aren't that difficult to see. Okay, back to the 1-year chart. Here you go. It's not that difficult. Where's the high? Right there. Where's the low? Right there. Where was it a year ago? It was pretty much at the low. Where is it now? Right here. What has the movement looked like for the whole year? Up, down. Simple, right to the point. Now go to the last 90 days. That's the last 3 months. 3 months ago. Down, up, high, low. Where was it? Where is it? Basically just going sideways. That's the last 90 days, last 3 months. What about the last 30 days? Last 30 days. Down, up, down, up. Not that difficult. Stop making it more complicated than it needs to be. It was created for a 9-year-old. Let's keep going. Do you show how to do this? I just showed you. What about BX? That's Blackstone? No. Black something. We just looked at that one. BX. Yeah, Blackstone. Yeah, that's a no. WBA, we already did that one. Celsius, too new. How do I learn more about this investing? Pam Cameron 102, how are you today? Well, I'm here every single night, usually 9:30. Wait a minute, 9 p.m. to 11:30 p.m. I'm just here late tonight because I'm trying to make up for lost time. Celsius, no. Okay, just keep coming back every single night. What about AB? What the heck is AB? AB. Yeah, that's a no. NAS 100, that's a no. How do you make 50% a year? Noah, how are you today? Noah, let's go over to my website, okay? Here you go, right here. This is the10minutetrade.com. You can find all the information, the link in the bio. Okay, so let's go all the way down to January, the beginning of the year. Every single one of my trades have been logged in. Okay, all the way back to January. Here we are right here. First week, first quarter. Let's click on this. There are all the trades right there. Macy's, General Motors, Ford, CVS. So let's say, hypothetically speaking, I put $100,000 into this. 1, 2, 3, 4. That's $25,000 a piece. 1% of $25,000 a piece comes to a grand total of 2.12% for the first week of January. This account over here, CVS, General Motors, Southwest Airlines, Comcast, Ford. Very first week, 2.99%. Second week, 1.3. 2.4. Third week, 0.85, 1.3, 0.9, 2.7, 1.6, 1.01, 1.03, 1.06, 3.68. Every one of my trades are logged on there. How do I make 50% per year? One bite at a time, 1% at a time. If I buy a stock this week, sell somebody the rights to buy it from me and collect a premium of 1% or more. That's over 1% per week. 1% per week is over 50% per year. That's how I make 50% per year. There are extensions you can use to make the site dark. Okay, I love Dory. If you want to send it to me, I'd be perfectly happy to take a look at it. I'm in my 60s. I'm not that technologically advanced. If I was, I wouldn't have 7 cameras running. I'd have 1 camera and I'd have some kind of software that shot it out over every one of my platforms. But I don't. That's why I have 7 cameras. Okay? If I knew how to do it, I would. But I don't. Like, what are you holding? What am I holding? Advanced Auto Parts, CVS, Halliburton, Harley Davidson, Kohl's, Marathon, Riot, Walgreens, Intel, Macy's, Apple, Aflac, Albemarle, Ford. Yep, that's about it for this week. All right, that being said, we're going to call it a night. Let's keep on going. Finish up these questions, and I'll be done for the night. DJT, yeah, we already did that. We already did that earlier today. Simone, this one is going to be new. The new time. No, it's not. The only reason why I'm here this late is because the band, I don't even know what you want to call it. They gave me a warning, said I said something to someone, I offended them, little feelings. So I got booted for 3 days. The lift got lifted at 11:30. So I said, I'm going to go on 11:30, just run it out to 2. Let's see what happens. What happened? Okay, T. All right, we already did that one. Why buy at, are you seriously asking me that question, Ken? Yeah, you already asked that question earlier ago. Covered calls are down and sideways. Why buy at the bottom? Well, at the bottom, the only way it goes is up. You're going to make all your money going to the upside. PLTR is a no. Do you have bots that can send me notifications? No, I do everything old school style. AB, no. ABV, ABBV, yeah, no. So I'm done for the night. Okay, my eyes are getting a little heavy. All right, that being said, this is James from Dividend Stock Talk. We're going to sign out for the night. You guys have a great night, and we'll see you again tomorrow at 9:30. Microsoft, we're ascending. I really can't tell you that one, Joel. I like Microsoft. I don't buy anything long term. Nothing. Stop broadcast on Twitter. There you go. You guys done here? Thank you. I am done for the night. And done over here. Oops.